I don't know if ugly, well, it pretty much is. Ugly news this week pertaining to Canopy Growth. Third quarter fiscal year financial results and the numbers, to put it bluntly, were terrible. Hey everyone, thanks for checking into our Traded Black podcast. I am your host, Shad Dales. Today we're talking cannabis and we're talking some pretty big numbers. I don't know if big as in great, but big as in wow, eye-opener this week with Canopy and a few others. But let's first welcome in our guest of the week, a friend of the podcast, been a few months, but let's welcome in the CEO of the Canadian Securities Exchange, Richard Carleton. Can't really say a Happy New Year. Where does time go? But good to see you.
Likewise, Shad and Ben.
Ben, good to see you. How was the week?
Yeah, week was great. What can I say? There's always things moving in the market. We're going to get right to it.
All right. So before we start talking about Canopy numbers, all views of the Traded Black podcast, the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. Okay, so let's begin with cannabis. I don't know if ugly, well, it pretty much is. Ugly news this week pertaining to Canopy Growth. Third quarter fiscal year financial results and the numbers, to put it bluntly, were terrible. Net revenue of $101 million in Q3 fiscal 2023 declined 28% versus a year ago, Q3 2022, and a 23% including divestiture of C3 and Canadian operations. Gross margins were negative, down 2% from an already bad 7% year over year, while operating expenses increased another 5%. So, Richard, I don't really need to say anything more with regards to these numbers, but I don't want to focus specifically on Canopy, but what are we starting to see as an overall trend amongst the big cannabis operators in Canada, but also the operators in the U.S.? What are you seeing that's going to materialize as the year progresses?
Yeah, this is really a continuing theme, Shad, that we've seen from, not just the Canadian LPs, but the U.S. Multi-state operators as well. And I think there's really a couple of factors at play. Mm-hmm. The first one is that when these companies were being capitalized back in the day, raising their first significant amounts of money, investors, particularly in Canada, were rewarding the companies that had the largest amount of funded cultivation capacity. Right, that was the thing. When you went to all of the investor shows, the conferences, and so on, the representatives of these companies would stand up and say, "We have funded grow for 2 million square feet of cultivation," and they'd get a standing ovation. Right, that was the thing. That was the benchmark that they were
lowest cost program,
exactly,
right?
Exactly, because that's right. The larger the facility, the more the cost could be rationalized, and you could reduce your overall cost of operation. Similarly, in the United States, you had the need for many of these companies, at least in their view, to vertically integrate. So seed to sale. How many times have you heard that? And so particularly given the fact that there's a substantial legacy grow industry, I think we'll call it that, in places like Oregon, Colorado, and California, in particular, the early adopters, the legal operators invested significantly in cultivation capacity. I mean, you folks remember the real estate run in the desert in California, outside of Palm Springs, Cathedral City, I think it was, that was seeing patches of desert, which were prime areas for greenhouse operations. It was an absolute real estate boom. And of course, what's happened?
Suniva, remember that name?
Absolutely. So, of course, what has happened both places, and I don't think this should come really as any great surprise, given that when you step back, adult recreational cannabis is a consumer packaged good. The medical applications of it have, pharmacy and wellness overtones. In each one of those businesses, you tend not to see the providers, the big names, the folks that are earning the high margins, that have the consumer, built the consumer relationships through marketing and history of service delivery to these consumer groups. It's all about the packaging, the branding, the sales level. That's where the margins are earned by these companies, not by being the best cultivator of hops. Anheuser-Busch is a successful company in the space because of their marketing reach and their distribution capabilities and their logistics.
100%.
And so
I see Ben nodding over there. We actually talked about this earlier this week. So let me ask this question as I cut you off. But do you think the MSOs are getting that wrong right now? I think they are. Some of the smaller companies I actually think are building better stories and brands, but I think the big MSOs are missing this completely.
I would say that that's actually not the case. They are getting it, and that if you look at some of the changes that some of the biggest companies have made, whether it was Curaleaf deciding to exit a certain number of states where they concluded they simply couldn't operate profitably. But I think you see the MSOs, the bigger ones, really are focusing on the areas of higher margin. And, you have seen a rationalization.
They are now.
Yes.
They are now, but in the past, obviously, that's
absolutely.
what I'm saying. Anyways, go on.
100%. They went down the same path that the Canadian LPs did. And again, at the same conferences, the same people were giving them a standing ovation for having the largest amount of funded cultivation capacity. And nobody really talked about it.
And you're in the back row going, I've heard this story a few times.
No, exactly right. Exactly right. So as I say, it's hard to be critical of the management teams of those companies because that is in fact what the marketplace was rewarding. That's how they were able to raise those large sums of money that they did out of the gate. But as I say, in the cold light of dawn, where we find ourselves now, there's real focus on what parts of the business are the ones that generate the profit, right? Where is the growth? Where are the margins? And of course, it's abundantly clear at this point, and you can see from all of the moves that have been made in Canada and the United States recently that it's not in cultivation. And that part of the value chain, of course, is being de-emphasized by all of these companies.
Yeah. Ben, I see you shaking your head with a lot of agreement with Richard saying there. A, what was your response to obviously the numbers? And two, what do you think is next for not only the company, but this Canadian market, which you and Anthony have been speaking about a lot over the last few weeks?
Yeah, I think Richard is 100% spot on with everything he said. I think Canopy has a particularly bad, being predominantly a Canadian player with a lot of its operations. I know it made those divestitures of retail operations, but there is no advertising up here. So they're mishandled. They're hamstrung. They have no outlet to operate a national brand across this country, right? So as we see right now in Canada, everything is fragmented, right? So what might be the most popular brand in BC is completely opposite from what's most popular in Ontario, right? So they don't have a good framework in which to operate. They never did because of the act, restrictions in the act that was presented upon legalization. And Richard's also right as well. I think they overexpanded, but that's what was working in the capital markets, right? Buying Stores and Bickle for Canopy was the thing to do. They had all this capital and they were expanding their operations because there was the expectation that things would go bigger. And once Canadian legalization happened, it looked like all the momentum was in the market, and it looked like the U.S. may follow in 3 or 5 years. And we talked about that. But as we learned that, that's not the case. We can't even get safe banking through the door. So what was assumed to be maybe a 5-year timeline into the U.S. after Canadian legalized, and that there was this momentum that was just going to spread throughout Europe and the U.S., the reality is it wasn't there, right? So they expanded obviously too big at first, and now they're dealing with the ramifications of that. Some of their assets like Stores and Bickle on their hardware side are moderating and losing money for them. So it's not just the retail, the brands and cannabis sales, it's some of their other operations as well. So, they need the U.S. to get going, essentially, is what it takes. Yeah. And they're doing Canopy LLC to try to get into the U.S. there, but maybe they can backdoor it. But until they can establish national brands and have a national supply chain like Constellation Brands does with their alcohol sales brands, it's going to be hard to make money.
Yeah, and I think there's another factor which is also common to Canada, the United States, and that is if you speak to the LPs and the MSOs, there's deep frustration with the failure of the local authorities to enforce the laws against illegal stores and effectively the illicit market, the illicit grow operations. And so when you look at, for example, in Vancouver, you know which one is the illegal one because it has the much broader product mix. It's a nicer store. It has a much more consumer-friendly ambiance than the legal one, which is more like going to the drugstore or to the dentist or something.
Right.
And that's particularly the case when you get into jurisdictions like Quebec, where there's a government monopoly on the retail side, and so there's an enforced shortage of retail points of presence, and it makes it extremely difficult for the legal market to compete effectively, even at the retail level, leaving aside all the issues associated with the impossibility of brand development when you can't advertise. So again, when you speak to, for example, the folks that are now launching in New York, how many trucks are there around Times Square that offering cannabis products at any given time? Hundreds of them.
Yeah.
And
I saw that in December.
So it's incredible. There's like mobile units that will pull up into a Walmart or just like in Times Square, and this will sell cannabis and then drive off in like a truck, sort of like a concession stand, like a hot dog stand or taco stand. It's incredible.
So obviously it's going to be really tough with the legal operators who are paying all the excise taxes, the sales taxes, and have all of the challenges associated with, you talked about safe banking, but obtaining banking and other financial services. To build obviously a successful retail franchise with all of that lined up against them.
Mm-hmm. How does it work in BC? They've decriminalized all drugs. You can hold a certain amount of possession. Is that correct? Yes.
I believe that's correct. Yes.
So dispensaries that are in BC, like there's operating dispensaries right now that say, for example, don't have licenses that are actually working in the illegal market. Am I understanding that correctly?
That's correct, and that actually predates the the legalization of all drugs, and at least for personal possession in smaller amounts. Yes. So these operate.
So how's that work?
These stores are literally operating completely beyond the bounds of any sort of legal status or standing.
And they're not like the authorities don't come in and shut the down. Like it's not worth their time. Like that's crazy to think. Like a storefront. Hello, you're not even hiding it.
Correct.
And that's also on the mushroom side too. You're seeing like psilocybin mushrooms, psychedelic mushrooms being sold as like microdosing pouches and things like that pop up. So it's not just limited to cannabis. Quasi-organized crime is like opening up stores. They'll pay the fine or they won't pay it at all, and just they'll shut up shop and they'll just move somewhere else. So yeah, it's a problem.
Well, you make good points. It's not just the Canadian market. There's a lot of headaches right now in the U.S. market. I want to look at broad picture, and I know somebody like you who speaks to a lot of well-connected people within the space with obviously your role with a lot of these companies listing. But if you had to, I don't want to say predict, Richard, but where is this industry in 3 years from now? Like, do we see any movement in legislation? I think investors want to get an idea to figure out where's the return on my investment eventually going to happen? Because anyone you talk to in the industry says the big days still lie ahead. Do they? And if so, like, what does that look like 3 years from now?
Well, again, you're hitting on another point of frustration for the operators of the companies, particularly in the United States, because we've actually identified who the winners are already. They're not being rewarded with asset valuations according to the both the top line and the bottom line growth that they're achieving. As I say, the share values for most of these companies are obviously off substantially from even their 52-week high, let alone their all-time highs. But we do see a number of operators which are growing sales, increasing margins, and in some cases, in fact, generating substantial profits at this point. So it's not all a bad news story. In fact, it's an incredible story for many of these larger companies. And I haven't even touched on things like employment growth and other positive contributions that the industry is bringing to the table. But from an investor perspective, as you say, there's been very, very slim pickings over the last 3 years, essentially. Mm-hmm. Notwithstanding the fact, as I say, substantial progress is being made by some of the operators towards very, very attractive margins and operating ratios.
You agree with that, Ben? With a lot of everybody's saying, obviously you do, but what do you think in the next 3 years happens with this industry?
Yeah, I agree a lot with what Richard said. I think a problem, and we talked about it extensively, is 280E, right? So the quality of earnings for these companies, even the few that are actually positive cash flow generating, it's still, they're not generating a lot of cash. It's not expansive, right? They're barely generating, positive cash flow, and I think this is a problem. So until I would look, I think the sector is going to become a lot more investable when that 280E eliminates, even if there is no federal legalization and national brands. Ultimately, I think the national brands, and again, when you get the supply chain in line so that when your margins eventually go down to say the 30-35% range on the gross margin side, that you become so efficient that you can package this up as a CPG product and put these on store shelves. That's what's going to make these companies even, very investable, like a Coca-Cola, like other CPG companies that operate in the consumer discretionary space. So I think you're going to need that. But the first step before you get there is going to be the elimination of 280E, because if you're paying a 65 or 70% effective tax rate, it's just going to be hard to generate a lot of free cash flow and positive net income, because you're just going to be on the margin. Even like the green thumbs industries, for example, they're positive cash flow generating, but I think it was only like $30 million or something like that for the full year. So that's not a lot of money, not if you want to expand and do a lot of things and keep growing. So, first steps first, let's get 280 out of the way. Let's get safe banking through. Let's get some positive signals that we can actually get some reform and that we're moving to that direction, and we'll kind of go from there.
Yeah, and I think certainly from what I'm hearing in Washington these days is we're basically in the same sort of place we were prior to the election. So even though the House has flipped, the Senate didn't. You've got a situation where Democrats. There probably is enough bipartisan support for a simple, safe banking bill in the House, notwithstanding the fact that you have Republican control. The question is in the Senate, where the Democrats are still, control the hammer. Are they going to set aside their interests in things like expungement and social equity measures that they were attaching to SAFE in order to get relief for the industry, at least some measure of relief for the industry through the legislation? And I don't think it's clear that that's the case yet. But I agree with Ben that it's
is it moving though? Is it at least moving in the right direction?
I don't think that if you were to ask the Senate and the House leaders at this point, it's not a priority. So they're focused on a lot of other things at this point, and they're again for the advocates, they're not getting a lot of help from either the House or the Senate leadership at this point. So which is unfortunate for the industry, because I agree with Ben. It's going to take some kind of positive signal from the federal government of the United States for some sort of catalyst on, a change in attitude towards investing in the sector, where we've moved from, again, as I say, it's kind of unfortunate that people aren't necessarily looking at the specific fundamentals of any given operator. There's just kind of a gloom and a malaise over the entire group, unfortunately.
Yeah. All right, let's switch to crypto. A lot of turmoil in the sector. This week, the SEC warned Americans over the risk of including assets like cryptocurrencies in their self-directed individual retirement accounts, IRAs, as well as unregulated trading platforms posing as exchanges. And as a result, Bitcoin sold off hard this week. So do you think this is the beginning of like an overarching plan with the traditional banking system and how they view crypto and possibly looking at, forming some sort of like regulation in due time for this industry, Richard?
Well, I think what people need to understand is that there is still a massive regulatory vacuum in the United States when it comes to crypto, right? So that it is not yet clear who has the hammer, right? Is it the SEC, who regulates securities? Is it the CFTC, who regulates commodities and, say, foreign exchange trading, for example? And that battle has been played out over the last several years without resolution. Now, from time to time, and there are a number of cases that are working their way through the federal court system in the U.S. as we speak. The SEC does seem to be winning the majority of the cases that where they seek to impose penalties on somebody on the basis that they were illegally distributing securities or trading securities or otherwise engaged in business with crypto as a security. And so it does appear that the SEC is, at least for the majority of what we think of as cryptocurrencies, is probably going to wind up being the regulator. And if that's the case, then in fact, it will have to come back into the traditional system in order to be bought and sold and held in client accounts in the United States. Now, we have a very similar approach in Canada, where the Canadian Securities Administrators collectively declared that the vast majority of cryptocurrencies were in fact securities, and that if the operators were going to conduct business with Canadian residents, they were going to have to register within the confines of the existing securities regulation framework.
So that, Richard, let me stop you there. And if it eventually ends up going in that direction and the SEC does take control, it sounds to me that a lot of these altcoins, or as they're affably named, shit coins in the community, a lot of those might be regulated out of existence if they don't have the proper disclosures, and some of those shady altcoins may not be there. Do you see that? Do you foresee that happening if the SEC does take control and there's a lot more scrutiny with these new offerings of tokens?
The short answer is yes, and people are going to go to jail for what's already happened.
100%.
And as they are beginning to now. And you see even the, sort of the bigger operators with, I guess, shall we say, better operating reputations and so on, they're paying fines to the SEC over the last couple of weeks in the tens of millions for failures on anti-money laundering, know your client, and a variety of other baseline requirements for operating in the security space. So, as I say, I do see increasingly that whole world being brought into the framework of what the crypto kids call the traditional finance, or TraFi or TRAFI. I don't know how they pronounce it, but whatever. My world.
We're not hip. We're not hip enough. But I do think that even the good people in the crypto space applaud those decisions, because I think they're tired of the endorsements, the big name people, the celebrities. It's falsehood that's, being branded the wrong way. And a lot of conversations of people within the industry that we're having conversations with for the last couple of weeks are say, bring on regulation. We really do believe in the industry, but however, it's like, for example, Anthony was saying a couple of weeks ago, the FTX exchange actually worked well. It was the people involved that actually threw the company upside down. So there's obviously some bad apples, and once those bad apples, go ahead.
I've got a couple of points I was going to make there. The first one is, all of these outfits call themselves exchanges, as part of the confidence game. They weren't exchanges. An exchange never holds customer funds. Okay. It does not have accounts. It is not managing orders on behalf of a group of clients. Right? An exchange is an arm's length place where you are providing some kind of centralized price discovery mechanism for, a series of regulated instruments, right? FTX is not an exchange.
Okay.
In sort of my world, my way to thinking, they were what you would think of as an interdealer broker that operates successfully in the bond and foreign exchange trading world, where they do have client accounts, and sometimes they may internalize. They may, on a proprietary basis, choose to execute an order that a client submits, or they may work that order in other pools of liquidity that are present around the world. That's how it works, and that's how FTX was basically set up, as a number of the other operations that were done. They're not exchanges. They were using the word exchange to basically give themselves a a patina of acceptability and that they're grown up and all of that stuff. So as I say, if they're going to, as the regulatory framework in the United States becomes more clear, they will probably decide to regulate themselves as alternative trading systems, which gives them a little bit wider scope to provide services directly to end user customers than a traditional exchange. But I think you do make a great point, and this is something I've been advocating with the folks in the crypto world for some years now, is regulation is great. You get a moat. Once you're in, you are protected against, as you say, the unsavory operators that are pushing all kinds of stuff, and that's
So how did walk me back? How does that work?
Well, when you put
how does it work?
Well, it took the Canadian Securities Exchange something like 2 to 3 years to work with the regulators to win exchange status. Right? We can nail that to the wall. We're an exchange.
Okay. Yeah.
And that gives you a lot of rights and privileges, and obviously obligations and responsibilities to your issuers and the investment dealers and their clients in turn. But it's really hard to get. But once you're there, there's a whole bunch of things you can do, right, within the existing framework, that are fully authorized. It's all laid out, and as I say, there's nobody else can put up. Should be able to set up next to us and say, hey, we're an exchange, we're doing all of these things, until or unless they've been through all of those that process. And that's really where we are with in the crypto world right now, is that some operators have elected to basically be proactive and seek out regulation where they can, and they basically use that as a something which distinguishes themselves from the rest of the operators, saying, "Hey, we're legit, we're open, we're transparent, and we've got a regulator looking over our shoulder to ensure that we're operating within the public interest."
Yeah,
I think the only concern with that is some people think that if it does get heavily regulated, then an asset or a crypto asset like Bitcoin might be regulated sort of away from its original intent. Instead of being a decentralized token, which could be that has all those privacy attributes to it, it may get regulated like a security, and that will just centralize it essentially, and that's what a lot of people don't want. So is that a concern that you think people of Bitcoin, investors of Bitcoin especially, should think about?
Well, I've heard that concern, Ben, as recently as yesterday in talking with some folks. Wow. But as I say, there's a price you pay for getting the moat and credibility with the broader investor base. And I think at the end of the day, if they're going to become part of the mainstream investment world, the price is going to be to join in to the existing regulatory framework in place.
Yeah, that's for sure. Do you follow the NFT space that much, Richard?
A little bit.
Noticed LeBron James with his NBA scoring record this week. It sparked a lot of activity in the space. Are you when you see the overall pickup in buying in tier 1 projects, are you having conversations and interest amongst companies, investors pertaining to Web3?
Yeah. There are a variety of things that we haven't seen anything come to light yet in the form of an investment vehicle that's listed on the CSE or elsewhere yet. There are a lot of interesting things that the technology can, in theory, bring to the table. And you and I and Ben have had this conversation before, that one of the things I find really interesting about the technology is the capability of taking some investments that are currently only open to private equity folks, right? So perfect example, right? Justin Bieber sold his back catalog to a private equity guy a few weeks back for $200 million, right? And the reason that Justin Bieber isn't able to take that and in effect monetize his back catalog to a broad group of people, right, his fans, all sorts of different investors or whatever, is there's the existing framework really makes that cost prohibitive, right? The way that people manage dividends and royalty payments, and I apologize, I'm getting into sort of the deep dark mysteries of the back office, but we don't need to go there. We don't want to go there, but but the reality is, if Justin Bieber were able to market using some of these capabilities that we're seeing in Web3 with NFTs, fractionalization, and so on. If he's marketing that catalog to in effect the public through a vehicle that they could invest in, I'm guessing he's getting way more than $200 million. And then the other benefit is the follow on to that is, if somebody's bought a fractional interest in your back catalog, they're probably interested the next time you're coming to town to do a concert, right? Or the next time you drop whatever they call albums these days. But you can use that linkage through the tech to basically give people a 15-second clip of your upcoming the thing you're going to drop, or hey, I'm going to be in Toronto in September at the Scotiabank Arena. Here's a 5% discount through Ticketmaster or something. So so there's a lot of scope to do some really interesting things with new asset classes for the public markets that I would love to see, and I think will be used in the coming years.
Yeah. You have something that they don't, supply and demand, that's for sure. Last thing I wanted to ask, and a macro question, but how do you see this economy playing out? We've heard rumors, few clients that we've spoken to, that potentially we could see a war in Ukraine end, at some point in Q2. I don't know how factual that is, but how do you see, what are you guys, I guess, anticipating for 2023 as far as the markets are going to perform?
Yeah, I mean, we're obviously... the jobs numbers out of both Canada and the United States were pretty spectacular, obviously, this over the last couple of weeks, which, hasn't given the, I guess, the doves on further interest rate increases in both countries much in the way of ammunition. Although, I looked at the Canadian numbers in some detail, and it's, as you would expect, the vast majority of it is service related, right? So restaurants, hospitality, so on. And if you look down sort of towards the bottom of the thing, it's, manufacturing was only up 0.3%. So it's, I think, still obviously big time recovery from the pandemic and kind of getting back to a level set. I suspect the U.S. is kind of in a similar position, so that it's great, it's fantastic that we're seeing those kinds of increases in employment, but these are not the sort of things that should be informing or telling central bankers to continue the interest rate increases. It's my sense that as soon as the pause, or in fact the first cut comes, whenever that might be, there is a substantial amount of dry powder still on the sidelines. And, there's, I think there will be a very sudden increase in equity market valuations really across the board, would be my guess. Now, as to when that happens, that's the, that's the multi-trillion-dollar question, that, whether it's Q3 this year, whether it's into next year, as, Mark Carney is currently suggesting. But again, it will come, and whether we have, a modest recession, a deep recession, or no recession between then and now, we probably do have, at least one more interest rate increase from the Fed. Bank of Canada will have to follow along. Tiff Macklin has no freedom of action. He just simply has to ask Jerome Powell what he's going to do, and Jerome will tell him, and we can all roll over and go back to sleep. But as I say,
so you believe there'll be one more interest rate hike? Is what you're saying?
Yeah, I think based on the job numbers, that's probably, I think the inclination was probably no more, but then the numbers over the last couple of weeks have suggested, I think, that it may go on a little longer than the Fed had originally suggested.
Interesting. Well, it's to your point. You think things, a lot of dry powder on the sidelines, things will move fast, whether the timeline is going to be later this year or early next. That day will come a lot sooner than what we think. But
Usually does.
For now, I guess it's just one day. Yeah, it does. It does, especially this stage of our lives. Last thing, let's bring you guys in. Here we go. Super Bowl 57. We're posting this tonight. So, Ben, we'll start with you. Who you got? Eagles or Chiefs?
To be honest, I haven't really looked at it all that much.
Come on, buddy. You're on the spot. We need a pick.
That's right. I'm on the spot. I'm going to go a prop bet, probably. But if gun to head, I'm going to say Chiefs are going to win this one by 3 points.
Thinking the Chiefs.
Chiefs by 3.
Richard, you're a football fan.
So I'm more of an AFC guy. So I've seen a lot more of Kansas City than I have of Philly. Here's the thing: if Philly takes the page out of the Bill Parcells Giants from a generation ago, grinds it out, I think the Philly offensive line and defensive line are probably the best 2 units on the field for either team. Keep Mahomes off the field. And the other thing is Mahomes is hurt. He's hurt. And if they can make life uncomfortable for him, and
you don't think 2 weeks off with high ankle sprain? How many weeks? That was against Jacksonville? So that would have been 3 weeks ago. How long?
You talk to any NFL guy that had a high ankle sprain, and most of the time, in fact, what happens is the tendon has pulled the bone off the leg, and they just sort of strapping it back in again. So no, it's not like I say, he's hurt. But if they are successful in grinding it out, keeping Mahomes off the field, I think that suggests that maybe you should take the under. And I do like, Philly to win in a low-scoring game, probably by, no more than 3 to 5 points.
Really?
Would be my guess. I will say on the other side, Kansas City is likely to crowd the box early on in anticipation of Philly trying to grind it out against them and try to force Jalen Hurts to beat them with his arm. But the difference, I believe, is that Philly actually has the receiver weapons to potentially beat that strategy. So, again, I think Philly has a few more weapons than they're being given credit for. And as I say, if they are able to grind it out in the first half, in particular, I like Philly.
So here we were thinking, do you follow football or not? Man, you sound like a friggin' Fox insider with the way you explain that. Jeepers. But Ben, I'm going Eagles. Fly, Eagles, fly. And I think the reason being is they've got no respect. All the attention's been in the AFC this year. And that pass rush the Eagles have is a little bit different than what Cincinnati's is. And Cincinnati's offensive line has major holes in it. Chris Jones is going to have a heck of a time. But I think you could actually see something similar to 2 years ago, the way Tampa came at Kansas City and won 31-9. You could see if Jalen Hurts, big difference between experience and Tom Brady and Jalen Hurts going there for the first time, but they don't rely on him just to throw the ball. Their running game is actually elite. So I'm not saying they're going to win by 3 touchdowns, but don't be surprised if you see them win by 10, 13 points. That's my guess.
Yeah, that's a thesis I can buy into. They're definitely solid on both sides of the ball. And the Eagles have a really good secondary, so they have that going for them. I haven't been following as much over the past 2 weeks, so I don't know how hurt Mahomes actually is. So if it's anything like Richard is suggesting and he's still hobbled like he was 2 weeks ago, then they might have a tough time. But, I'm just looking for a good game overall. I think it's going to be close. I think it's going to be close either way.
And I'm going over. My prop bet over. The national anthem will be sung in over 1 minute and 42 seconds. It'll be intense. But
Chad,
we got to get off to a good
start.
The
prop bet I'm looking for is that on the assumption that they're going to be showing the game in Philly at the link on the big screen. The over under on the number of people because they have a court and a jail at the stadium, right? And so the question is I
did hear that. I did hear that.
So the number of people jailed over the course of the game, I think, would be an interesting prop bet. But
what's your over under on that, Richard?
I actually don't haven't been there. Not sure whether we're talking about a small handful or 50 is sort of the number. I don't know, but
I'll never forget the mid-90s. Michael Irvin from the Dallas Cowboys. had a spinal injury. They had to take his face mask off, and he's strapped on a stretcher, and he's about to go underneath, into the concourse area. There's fans whipping garbage at him, and I'm like, only in Philly. But yeah, you probably have a good point. If there is, I'm going to go over 3. There you go. Anyways, I don't know where we get that information, but maybe I'll hold myself accountable for that and find that out in my next podcast for next week. So I'm going over 3. There's my guess. Anyway, enjoy your time off next to I should say tomorrow at the Super Bowl, and I appreciate you checking in. Give us some insight on the way the markets are going to perform over the course of obviously here in 2023, and more importantly too, just the overall cannabis landscape. Very insightful, but I always appreciate you checking in.
All right, thanks a lot, Chet, and good talking with you and Ben as well.
You too, Ben. Stay off the sauce, not too much tomorrow, but enjoy yourself.
I might take a day off from that, but yeah, I'll see what I can do.
All right, thanks, guys. Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.